Well, good morning, Joginder Rana here. Let us discuss a technological topic today. The topic is decentralized insurance in India. Decentralized insurance in India. See, insurance is a safety net. Whether it is for health, automobiles, travel, or life, insurance provides people with peace of mind that if something untoward happens, they are covered financially. But anyone who has ever made an insurance claim in India is aware that the process can drag on, confuse, and frustrate you. From delays in paperwork to allegations of lack of transparency, the system has not always been effective for all. So this is where blockchain technology and decentralized insurance models are starting to make an impact. So they are providing a new method of processing claims that is faster, more transparent, and more reliable. So understanding decentralized insurance is necessary. Historically, insurance operates via centralized firms. The firms receives premiums from customers and subsequently utilize those premiums to settle claims. Now, all aspects from assessing claims to determining amounts to pay and when to pay them are managed by the insurance firms. So, centralization has its drawbacks, inefficiencies, delays, and the occasional disagreement. So, decentralized insurance utilizes blockchain, a form of digital ledger technology, to transform the way that insurance is handled. Rather than being carried out by one organization, it all operates on a decentralized system in which data is shared between numerous computers. So this opens up the process and eliminates the necessity for a center to authorize or validate each step. So in distributed insurance policies, claims and payments are usually controlled by smart contracts. These are automatic programs on the blockchain that execute an action immediately when a certain condition is fulfilled. So, for instance, a smart contract may automatically pay out if weather information indicates a flood in a particular area and a customer has a flood policy for the area. Why it matters for India? India boasts one of the world's fastest growing insurance market. Yet the majority of the country's population does not have access to insurance, particularly outside cities. So some of the reasons include lack of trust and a complex claim process. If people believe that insurance will never come to assist them when they need it, they are unlikely to purchase it. Decentralized insurance based on blockchain may be the solution to this issue. Since the decentralized system is open, individuals can observe everything that goes on when making decisions. So since smart contracts are able to execute payouts automatically, there is less space for denial or delay. And since data is distributed through many sources, there is less chance for fraud or mismanagement. For instance, a rural Indian farmer purchases weather insurance. He might not need to make manual claim if there is a drought. So the smart contract that is tied to a government weather database might sense that rainfall was at a certain threshold and release the payments automatically. So no claim filing or inspection is necessary. The funds arrives when they are needed, fast and equitably. So there are advantages of blockchain in claim processing. One of the most significant benefits of decentralized insurance is the speed. And the speed matters. As compared to conventional insurance claims, which may make weeks or days to process if investigations or documentations are required. The use of smart contracts enable the process to be almost instantaneous if the necessary conditions are satisfied and the source of the data are secure. Yet another important advantage is transparency. As public and unalterable blockchain records, policyholders are able to see each stage of their insurance policy. So from the way premiums are determined to the way claims are valued. So this transparency instills trust, particularly in those markets where confidence in old world financial institutions might be low. Then cost saving is another significant benefit. So by decreasing administrative overhead and manual processing, decentralized insurance can save insurers the cost of operations. These savings have the potential to be passed on to consumers through reduced premiums or more comprehensive coverages. The challenges and considerations are always there. Naturally, decentralized insurance remains a nascent idea, particularly in India. Regulation is one hurdle. Insurance in India falls under the regulations of the Insurance Regulatory and Development Authority of India and would have to adhere to current laws and regulations. Another issue is adoption of technology. Blockchain needs a digital framework and technical know-how, which may not be readily available in every region in India. To implement decentralized insurance on a large scale, there will have to be an endeavor to train users as well as provide secure and easy to use platform. Accuracy of data is also paramount because a smart contract depends on external data, that is weather forecast or accident records. They are only as good as the data they are fed. So what this implies is that the data sources, the so-called oracles in blockchain parlance, should be trustworthy and secured against tampering. So what the future holds? In spite of these difficulties, the prospects for decentralized insurance in India are good. With the nation continuing to invest in digital infrastructure, the additional individuals going online, blockchain-based systems can contribute to making insurance more accessible, transparent and equitable. A number of startups and tech platforms are already looking at how to introduce decentralized insurance into India. Given time, the encouraging policies, this technology could be a significant addition to the way individuals guard themselves and their loved ones. So in a nation where access and trust are among the largest impediments to insurance purchases, blockchain provides a realistic solution. It makes the process easy, more transparent and less prone to delay that have for long afflicted outdated systems. Though it won't supplant traditional insurance outright, decentralized models can definitely supplement them, particularly in regions where the system is currently lacking. So in a nation where access and trust are among the largest impediments to insurance purchase, blockchain provides a realistic solution. It makes the process easy, more transparent and less prone to delays that have long afflicted outdated system. Though it won't supplant traditional insurance outright. Thank you.